What's going on, guys? So let's talk about the stock market. We are obviously closed tomorrow due to the holiday. It's going to be a long weekend. I know a lot of you guys out there got chopped up this week. I know a lot of you guys were thinking long. We went short. A lot of you guys were trying to get short. You got trapped. A ton of, just wildness in the market. From a macro picture, looking at the Nasdaq 100 here, there's a reason why. Okay, so there's a reason why. The simple reason was we were range bound. That's the very simple answer. There is, no need to get cute. There's nothing to, there's no secrets. If you take a look at what's going on here, these are daily candles. Okay, starting the beginning of the week. Tuesday, Wednesday, Thursday. Where is this momentum going? Nowhere. Okay, it's going nowhere. We are trapped within a range here. You can see the lows. I mean, Monday's lows were barely taken out. If we look at Tuesday, Wednesday, and Thursday, lows, very, very clear line in the sand. What about the top breakout? Line is clear as day. There's no reason to get and make this complicated. So are you wondering why you were taking a long position, maybe an intraday day trade or a scalp, and then you're immediately getting stopped out? This is why. Were you trying to take a short position and then getting stopped out and the market bouncing? This is why. When the market is doing this, it's going to make intraday trading extremely harder. So what do you do as a trader? How do you really combat that? So the easy way to combat that is to take profits when you got them. Now, I know that sounds very cliche. I know a lot of you guys want the 40, 50, 100% winners. Guys, take 10%, take 6%, take 15%, take the 20% trade. Take the money when you got it, because the minute you look for more is the minute that the market is going to reverse on you, especially when the market is doing this. This is what is called a distribution cycle. We get these distribution cycles. It seems like a lot more as of late than in a normal market. Normally in a normal market, you get a distribution cycle that normally lasts about a week, anywhere from 3 to 7 trading days. And it's normally once every 2 or 3 months, normally once a quarter, right? If we can kind of just look here at what's going on this year, you can see this, another distribution cycle. Okay, you can see this, another distribution cycle. You can see this, another distribution cycle. All of these distribution cycles are very choppy. Moves up, moves down, moves up, moves down, before we either break out or break down. Up, down, up, down, up, down, up, down, before we make another move down. Up, down, up, down, up, down, down. Okay, we find the bottom, we ramp. Again, this was also a distribution cycle. Up, down, up, down, up, down, up, down, down. So here we are yet again in another one of these up, down, up, down, up, downs. Now, are we going to break down, or are we going to start to break up? Okay, now in order for us to break up, what's going to need to happen is we are going to need to hold this floor. The bulls absolutely need to hold this floor next week. We need to put in some sort of inside bar day, and we need some sort of, maybe 1 or 2 more days worth of this consolidation distribution. And then we need to finish at the top of the range. And as we finish at the top of the range, we need to start clearing out some of these levels of supply. As hard as it is for me to say, this move to the top side is going to be difficult. There is so much supply zones ahead. There's a lot of resistance. Okay, we are still a ways away from the 50-day moving average. We are underneath the 20, we're underneath the 10, we're underneath the Bollinger Band, the 100, the 150. So much supply, the 200, the channel line here. This is a lot of work for the bulls to get through. Even if the move is moving higher, you're going to have difficulty trading this on a day-to-day basis. Now, I'm not talking about one day. I'm talking about, you might have a winning day, but it's going to be very, very difficult. You're going to have some winners. You're going to have some losers. You might have a red day mixed in there, followed by a green day. And then you feel like you can't get any sort of momentum going. Well, when you start asking yourself, why can I not get any momentum going? Why does it feel like every single trade is not working? Well, because we're trapped underneath supply until the triple Q start reclaiming a 200-day moving average, where we have a nice clean home stretch here. The market is going to do this. We are going to continue to be trading very, very choppy, where we get big extended moves up followed by big moves down. And then when we get those big moves down, we're going to go sideways, 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 sideways until something gives one way or the other. It's just going to be like that until we lose the bottom, until we lose the bottom and we start making this leg down, or until we start taking out some of this price action where the move has room to run. The move has room to run. All of this trading action, even though this is a trading range between, I would say, let's say, anywhere from 330 to around 360, maybe a 30-point range. This is nasty, nasty action. Now, are you going to be able to catch trades in this action? Of course. But, swing trading is tough. The day you want to swing trade long, the market gaps down. The day the market looks like it's ready to flush, the market gaps up. Very, very tricky to swing trade in this market. I would not recommend trying to hold too many overnight positions in this market until we start to pick a direction. And until we start to pick a direction, make sure when you guys are taking trades, you guys are taking profits. Depending on your position sizing. If you guys are going in with $1,000 options trade and you make $100, that's 10%. That's good money. Okay. Consider taking it. If you guys enter into a trade with $1,000 and you guys make $80, that's good money. Consider taking it. If you guys enter into an options trade and it starts to get away from you and you're down to $100, $150, and it's broken below your stop loss, broken below your support, I would consider cutting the trade and taking the loss, walking away, living to trade another day. If you guys are trading $5,000 worth of size and you get a $250 mover, you get a $500 mover, I would consider taking the money off the table. If you guys are trading $10,000 per play and you guys get a $500, $1,000 mover, I would consider taking the money off the table. Okay. As you size up does not mean that you're looking for more money. Just because you play with $5,000 per trade does not mean we're looking for $10,000 worth of gains. We're playing with $10,000 does not mean that we're looking for $100,000 worth of gains. We're looking for that 10 to 15% mark. It doesn't sound flashy. It's not exciting, but guys, trading is not supposed to be exciting. When trading's fun? When you're winning. When you're winning, trading becomes fun. When trading is boring and you can see these patterns and you can have the instincts and you can read the price action and you know that you can lay down $2,500 on a trade and walk away with $200, that is satisfying. Putting in $2,500 on a trade and hoping to make 800 is gambling. Okay. Yes, it's a very, very short-term satisfaction that you get. However, what you're doing is training yourself to, release this dopamine and get excited. And all it is just chasing and chasing and chasing the next big trade. And guess what happens? You chop yourself up in the meantime. You let those 10%, 15% winners go to the wayside and turn negative on you. Trust me when I say this. Understand your macro levels. If we are in a distribution cycle, which we have been, you have to trade in the direction of the day's trend. You should have been shorting on Monday, shorting on Tuesday, going long on Wednesday, going short today, okay, on Thursday. You have to trade with the trend. You have to take profits extremely fast. You cannot get upset that, you missed a bigger part of the move. You cannot get upset if you enter into a trade and 10 minutes later you get stopped out. That is the name of the game. If that is not going to be okay with you and you are not comfortable with that and you are looking for the next squeeze play or the next pump, go follow, these guys on Twitter. I see them pop up on my feed all day long, pumping these stocks. I've never heard of these companies before, but they're pumping up stocks that you can get in on and, try to catch the pump before you get dumped on. You can do that. You know, there's different things that you guys can do if you want to chase that adrenaline, depending on where you live. You know, Vegas for me is a 5-hour drive away. If I want the adrenaline, I could just go down to Vegas, enjoy myself. At least I can, you know, enjoy a good view and have a cold drink while I'm at it. But, you know, I treat trading as a job. You have to treat it with that kind of level of respect. If you do not respect the market, you do not respect your stop loss, and you do not respect the money that the market gives you when the market gives it to you, it will humble you, and it will be a sad deal when it does humble you. A lot of people have been getting humbled since 2020, 2021 especially. You know, you have to figure out what works for you. You know, where is your sweet spot? Are you a shorter term time frame trader, meaning you like to trade the 5-minute chart? Are you a little bit of a longer term intraday day trader? Maybe you like to use the hourly candles. You know, are you a swing trader? You know, even though it's hard to swing trade, there's still opportunities. For example, you know, when the triple Qs reclaimed the 20-day moving average, it gave us a buy signal, and we literally could have ridden this from a price of around 340 all the way up to a price of 370. That's a 30-point move in just under 2 weeks. We did get our sell signal here on the triple Qs under 360. So if you are a swing trader and you enjoy and can stomach the ups and the downs, you could have got short at 360 and ridden this all the way down to 337. So there is opportunities to swing. You just have to be able to stomach the ups and the downs. And especially if you're trading options, you need to make sure you're sized correctly. You need to make sure you have the correct strike price. You don't want to really be going too far out of the money, and you want to, you know, scale profits along the way. So hopefully you're taking multiple contracts when you are swing trading, so you can sell some for profit, and kind of trail down that stop loss, so you don't lose any money if there is some sort of weird reversal in your position. But I just kind of wanted to give a brief little market overview here. On the Nasdaq. Nasdaq looks like if we get any sort of bounce on Monday or Tuesday, and then we start to get weaker and we do lose today's lows, the market is going lower. It will be another leg down. We could actually come back down here and start retesting this little bit of double bottom that we had. As much as a lot of people do not want to hear that, I mean, it's reality. Okay, it's reality. I don't see the market doing a little dead cat bounce and then kind of losing it and just stopping in the middle of nowhere. You know, that really doesn't make sense. Stop in the middle of nowhere and just kind of reverse and go back up. I mean, that doesn't even look right. You know, I mean, maybe if we, you know, have a little bit more of a retracement back down into this zone and we start to consolidate, then what we could start to say is maybe this is going to be, you know, higher low. So if this is our double bottom and we do come back down here, well, this is our higher low. And then when we make a new push and we consolidate, this would be our next higher low. And the chart would just continue like that. That looks healthy. You know, now, could this be our higher low? Absolutely. If the market holds this level here, and let's say Monday and Tuesday Monday we get an inside bar. Tuesday we kind of back test and then intraday push higher. As soon as we start to break out of this channel that we've been stuck in here and put in a new high, then yes, we can call this a higher low. And that next consolidation that we get, if we do break to the top side, this would be our next higher low. And the chart trend could completely look like that. This would hold a nice trend line here. Kind of clean up all this mess. This would kind of hold a nice trend line moving higher. So the stock can do something like this, right? That would be ideal situation for the bulls. But here is where all of that gets negated, is if we lose this trend line, right? If we bounce Monday and lose this sometime next week, it negates the thought process of riding this trend line higher, okay? Because any sort of breakdown and then back test would now turn this into a resistance for a further continued push down. I hope that helps. I'm going to do a ton of technical analysis. I've got nothing but time this holiday weekend to put out probably 50 videos for you guys on different stocks, on different trainings, market forecast, so forth and so forth. Definitely stick around, subscribe to the YouTube channel, join the Discord. That link is down in the description box below. I'll see you guys all next time.